The problem is that oil prices are continuing to weaken here, and even though we've had a little bit of a bounce here after a very sharp sell-off, the trend overall in oil prices remains weaker, and that's not something that suggests you're getting a lot of relative economic strength. But here's what you need to know before the bell this morning. The week before last, we had a 4% decline in the market, and which had everybody up on edge. We had broken through important support last week, week before last, had broken through those important support levels, tested the 100-day moving average. Last week, we had a 4% rally. So all of that angst in 1 week was wiped out last week. And again, a big rally kind of in anticipation of what the Fed's going to do this week. But, kind of a couple of things that occurred from this. First of all, we had a big reversal day about 2 weeks ago. And that reversal day is interesting because normally reversal days tend to mark bottoms in markets. And that's what we saw. However, historically, there's not a lot of data confirming that reversal days mark bottoms because there's plenty of points where reversal days occurred at market peaks. It's the same thing with weekly reversals. So we had this big reversal over the last 2 weeks. So we had a reversal week. Reverse that complete sell-off that we had, 4% rally to back off that 4% loss. That also, historically, does not really align always to market bottoms. It also marks, at periods of time, market peaks. Now, that doesn't mean markets are going to crash. It just means that markets tend to struggle at some points in time, even though you have these big reversal weeks that look very bullish on the surface. And there's no doubt that this was a very bullish reversal. We reversed that sell-off in last week, good strong volume. We reversed the MACD sell signal back to a buy signal, and we moved markets back from oversold back towards overbought. So again, it was a very bullish kind of action last week. We got above the 50-day move, retested the 100-day moving average on Wednesday, rallied immediately above the 50-day moving average, then took out the 20-day moving average on Thursday and Friday and supported that. So again, the action of the overall market right now is very bullish. There's not really any reason to be overly bearish about the markets near term. However, it is important to note that big reversal days don't always mark bottoms. There's a lot of kind of narrative running around the markets right now saying, oh, it's a huge reversal day. We had a big reversal week. That's always marked bottoms. Next 12 months, markets are higher. And that's true. Markets tend to be higher 12 months from now more often than not. But that doesn't mean that you can't have another correction in this process. So again, we do have some inherent risk out there. I wrote about them in this weekend's newsletter in the Bull Bear Report. But one of those risks that we're paying really close attention to right now is oil prices. Oil price, again, this is the other problem with this narrative that the markets are strong and we're super bullish, everything is fine, and the Fed's going to cut 50 basis points. The problem is that oil prices are continuing to weaken here, and even though we've had a little bit of a bounce here after a very sharp sell-off, the trend overall in oil prices remains weaker, and that's not something that suggests you're getting a lot of relative economic strength. If you had stronger economic growth, there's a very high correlation between the direction and trend of oil prices and economic activity, which only makes sense, right? Because we have such a heavy dependence on oil as a commodity that if the economy is weakening, then that means there's less demand and less consumption of oil overall. And that's kind of what we're seeing right now in these numbers. Now, again, oil is very oversold here, so I would certainly expect a bit of a bounce here. Near-term energy stocks themselves are extremely oversold. In fact, if we just take a look at the Energy ETF, XLE as an example, this is the iShares ETF. By the way, these things track oil prices very, very closely, obviously, because oil is the main input into the earnings and profits of oil companies. But again, very oversold here. Traders' positioning is extremely weak on oil stocks. So again, as we noted in this weekend's newsletter, out of all the major sectors of the S&P, all of them overbought, except for energy, which is extremely oversold. So we could see a bit of a rotation into energy here over the next couple of months heading into the election, especially if odds of Trump winning the election become a little bit more favorable. That could provide a boost to energy stocks. So just something to kind of pay attention to here, but it certainly doesn't denote a lot of economic strength of what's going on right now. All right, that's what you need to know before the bell this morning.